The market is all over the place right now. War is going on, tension with Iran, gold is at an all-time high, and most people are just frozen, scared to touch anything. But here's what I've learned. The best investors don't run from chaos, they run towards it. Today, I've got Lilly with me, and we're breaking down 3 stocks that are actually set up to win in this environment. We've got a defense name, a gold play, and one infrastructure pick that most people are completely sleeping on. Honestly, that might be the most interesting one. Let's get into it. Welcome back to Navellier Market Buzz. Dad, before we get into the names, can you set the scene for people? What is going on right now?
Well, we're oscillating. A good example is we thought crude oil prices had peaked, but then Israel struck Iran's natural gas facilities in southwestern Iran, and that caused oil prices to spike again. Now, that's interesting because apparently we approved that strike. And I don't know if that's tit for tat because they hit Qatar's LNG natural gas facilities. I don't know if that's because we dominate worldwide LNG shipments. But I find that very interesting. Obviously, Israel continues to take out big leaders. So we'll see if new leadership emerges. But I would hope this all would be over soon. It's futile. And we want to integrate Iran with the rest of the world. The Persian culture is a great historic culture, and they're very smart people, and this is the population. So it'd be great if they could be integrated back in the world. But we just have to finish doing what they're doing. Apparently, the U.S. has hit over 7,000 targets, and then you throw in all the Israeli targets. So this is quite interesting, but it promotes uncertainty and it is a distraction.
Now, also going on in the markets, Morgan Stanley this week predicted up to an 8% default rate in private credit. What's going on there?
Well, that's really interesting because Morgan Stanley really pioneered the selling of private credit. Morgan Stanley was run by McKinsey people, Mr. Gorman and company. He's since retired. And they basically pushed a lot of their investors into private credit and private equity. And I think when they say there's going to be an 8% default rate or up to an 8% default rate, I think they're just trying to cover their butt. I think that those defaults will be eaten by the originators. And I don't think there will be many, if any, losses. In the event there is investor loss, it will destroy the industry. So I think the industry has to step in and cover the losses. And so they protect the investors. They might have to lower their yields to investors. That might be a better thing to do. They're already restricting the outflows. It's usually 5 to 7% you can get out each quarter. But Morgan Stanley is warning people because they sold so much of this. I've been a big critic of private credit, but I'm watching how the industry is responding. And I think they are going to try to prevent investor losses at all costs and even hurting their profitability. So Blackstone, BlackRock, Blue Owl, KKR, Cliffwater, all are going to try to make sure no one loses money. And because the day somebody loses money in private credit, the industry will collapse. And that will also take out some of the private equity firms because they rely on private credit for financing. So this is a big deal. And if there is a problem, the Fed will have to slash rates up to 100 basis points because private credit is a shadow banking system in America, largely caused by Dodd-Frank. Dodd-Frank made lending impossible unless your credit score is perfect. So for everybody with a less than perfect credit score, there's a $3 trillion private credit industry ready, willing to serve you. But the banks buy the loans from the private credit. Jamie Dimon called them cockroaches. Ed Yardeni, one of his articles, said they're sweeping the cockroaches under the rug. Ed's very colorful. And that's what I think they'll do. I think they will basically try to make sure no investor loses money. But that's just my opinion. And I'm not in this business, but everybody's been warned.
So why does 2026 feel like such a weird and specific moment for markets?
Well, what's weird about 2026 is that what's working is what worked last year. We're basically in a rerun of last year, which is data center related stocks, Eli Lilly. I know Lilly got downgraded by a firm, but its forecast sales and earnings are great. And its year-to-date performance magnificent. And the gold stocks. Now, the gold stocks are clearly more volatile than they have been, but gold remains an oasis. Central banks around the world are going to continue their quantitative easing, and the only way they can shore up their credibility is to buy more gold. We saw that in the January trade figures that U.S. exports soared due to gold exports. So I still think we should have a big gold bet. I think that's a good place to go for safety. The U.S. dollar is another place for safety. But the earnings environment is incredible. Nvidia had their developers conference this week, got everybody excited. Micron, of course, announced incredible results. There's a lot to be excited about out there. There's not an earnings problem. Now, the new glitch we have is the producer price index came out. And this is before the war. This was the February number. And what happened is food prices, wholesale food prices were up 2.4%. And wholesale energy prices, unfortunately, also rose significantly. So this is before the war. So that means when we get the March PPI, it's going to be much worse. So this is obviously caused the Fed to hesitate, not raise rates despite a bad labor market. And I think a lot of this inflation is transitory, okay? But there is a problem. There's a big strike at the packing plants where they process food and everything, mostly beef. And that strike's just going to keep beef prices extra high. And chicken's the new protein that most people will be eating because beef has gotten so expensive. So this is real inflation that people feel. They'll feel it at the gas pump, and hopefully it will all be fleeting. I think the other thing we got to watch is, they've implemented 4-day work weeks in Asia because of the gas shortage, but they're not talking about how California gets a lot of its gas from Korea because, they've been shutting down refineries and pipelines. Although they did reopen the Santa Barbara pipeline. The Trump administration did it. California's protesting it, but that's from the offshore oil fields. But California still has to import gas, mostly made in Korea, but it can be mailed elsewhere. And so the gas shortages could hit the West Coast because they're just not hooked up to our energy infrastructure in, Texas, Louisiana, Montana, etc. This is going to get interesting. So the next time if you visit California and gas is $8 a gallon, you know what happened.
Yeah, I agree. This all is pretty wild. And what I think is interesting is that there's 3 completely different ways to play all of it, and they're not all obvious. So I think we should start out with the most direct one, our defense play. Elbit Systems. Dad, a lot of people watching probably have never heard of this one. What does Elbit actually do?
Well, they have big contracts with Raytheon and other big U.S. defense contractors. And they're an integrated defense contractor in Israel, but they're also behind all the missile shields. And let's face it, those missile shields are godsend. They block 90% of the missiles coming in. And those missile shields were deployed everywhere throughout the Middle East. But, Iran can poke through every now and then, and especially with the drones where they create a swarm. But obviously they won't be launching missiles or drones much longer because all those facilities are taken out. And the last missile they launched on Israel was a cluster one where it opens up with a bunch of little bombs. And that's really tragic because that's hard to stop. And even if you blow it out of the sky, the little cluster bombs come down. So I think that's increasing desperation on Iran's part, but obviously it cause a lot of death on the ground. And you have to go in the shelters when the air raid sirens come off when the missiles are incoming, because just all the shrapnel that falls out of the sky, even if the interceptor system works. So this is a very tragic development, and hopefully it's going to be over soon.
So the numbers are kind of insane. Elbit just reported a backlog of $25 billion, and that's like 3 years of revenue already locked in. So Dad, when you see a number like that, what does that actually mean for someone investing in it?
It means the earnings are guaranteed. Just like Nvidia guided that they're going to have $1 trillion in sales next year, and that's 100% sales growth. So when companies have an order backlog, it's a wonderful thing.
So make the case. Why buy ESLT right now and not wait 6 months?
Because they're going to get more orders. You need these missile shields. And believe it or not, it's one of the reasons we want Greenland to put a missile shield up there. Not an Elbit shield, but from other defense contractors. This is for big, long-range missiles. So I'm not trying to make the case for Greenland, but that was one of the reasons.
All right. Not everyone wants to own a defense stock, and I totally get that. So our second pick is completely different on the same environment. Let's talk about our gold play, IAMGOLD. Now, gold just broke over $5,000 an ounce. Dad, for people who might not be following gold that closely, how crazy of a number is that historically?
It's not that crazy because it'll be $10,000 an ounce by the end of the decade. And that's coming from central bank buying pressure. That's coming from a lot of the crypto people will probably increasingly switch to gold because crypto was a very poor investment last year and a volatile investment this year. I know it's recovered a bit, but I don't think everybody wants 40% a year volatility on their assets. Gold is just a traditional safe haven. There's the only place to invest is the US dollar and gold. All the other currencies around the world are weak. The government's going to be doing quantitative easing or devaluing their currencies. Interest rates will continue to plunge due to recessionary fears, as we talked in a previous issue of Market Buzz. Canada is clearly in a recession. They've lost the equivalent of 1 million jobs in America. They can't withstand that. Germany had its factory orders decline 11% in a month. There's a lot of problems out there. And a lot of it is demographically based. And Trump had the Irish prime minister in the White House, and the Irish prime minister is very proud of how international Ireland is becoming, because a lot of foreign companies set up shop there and all. But Trump was also bugging Europe about, letting immigrants they can't assimilate and things like that. And the Irish prime minister was trying to assure everybody, no, people come here to work and they're productive people. So, I'm not arguing on any side. I just think that if you can't have household formation and you can't have organic growth, you're in trouble. And that is basically Asia and most of Northern Europe. The only countries growing are the U.S. and India. Now, Iran is a very young country. So if they can join the world community again, that would be wonderful.
So you're bullish on gold. Why not just buy like a gold ETF or physical gold? Why do you want a miner like IAG specifically?
Well, you can buy a gold ETF. We are recommending WisdomTree as a stock because that's WT because it fits our criteria. But when we dig into WisdomTree, a lot of their strength is tied to their gold ETFs, and they have some that are up over 200% in a year. So the construction of them was better than most. Okay, so if you do want to buy gold ETF, I would recommend the WisdomTree ones. But yeah, the stocks are showing up on my radar with very strong sales and earnings. And I'm not anti gold ETFs. Just make sure you buy one of the better ones. And every time you buy an ETF, just check the spread on Morningstar. The spread should be very tight in the morning and very tight at the close. Just be careful what time of day you trade. But all ETFs do have spreads, as do stocks. But you can go to Morningstar.com and check out that spread.
And analysts seem to be waking up on this one too. Bank of America has a buy on it. Scotia Bank just raised their price target. Dad, what does it mean when you start seeing that kind of institutional attention on a smaller miner like this?
Well, the reason you're getting analyst upgrades is the earnings. Okay, gold prices go up, your margins expand, and so they're just following the results higher. But I don't see. I know gold doesn't go up every day. Okay, and I encourage people to buy it on every dip. But yeah, the fundamentals underneath it are incredible. So that's what the analyst community is doing. Our whole thing is surfing institutional buying pressure. And the analysts, rightly or wrongly, are lemmings. They're slow to upgrade. They like to underestimate because if they overestimate, it's embarrassing for them. And they got a lot of explanations and they could be held liable and all kinds of things. So they just always underestimate. And so we like this institutional parade in the stocks and the institutional parade into the good gold stocks, like IAMGOLD is.
Okay, so we have a defense and a gold stock. Now here's one I think is going to surprise people the most because it doesn't really sound like a war stock at all. And this is Quanta Services. Dad, most people hear the word infrastructure and their eyes glaze over. But let's wake them up. Why is this relevant right now in a world that's dealing with all this geopolitical chaos?
Because they help build the data centers. And the data centers are driving, depending who you talk to. One time last year, they said it was 88% of our GDP growth. I think that was an overstatement, but it's a lot of our GDP growth. And, if you don't live in a state where there's adding data centers, you don't see that. But I'm in Reno, Nevada now, and clearly it's a boom here. The data centers go where the internet's really fast, where the electricity's more reasonable or green. And the data centers also go where it's cold. because they have to vent these buildings at night. So Reno, Boise, all along the Columbia River Gorge with the hydroelectric dams. I can take you to Sioux Falls, hydroelectric there, and it's kind of cold there in South Dakota. So, and super fast internet, Chattanooga is another place. So again, super fast internet, very reasonable electricity from hydro and other sources. It's just unbelievable what's happening on with AI, and we can see that how good it's gotten the past year. Chat GPT is not the leader. Most of us see Gemini from Google. Most of us are still using Google, but Claude from Anthropic looks wonderful, and obviously Elon's got Grok, and all these search engines and AI queries are going to get better and better. And right now, I would argue that Claude's the best from Anthropic.
So when we look at these numbers, Q4 revenue was almost $7.9 billion, up from $6.5 billion the year before. And their backlog is nearly $44 billion. Dad, $44 billion backlog for a company most retail investors never heard of. How do you even process that?
What's happening with data centers? Their order backlogs, just quarter over quarter, continue to rise. Usually 20 to 35% year over year. It's 50 to 65%. They can be constrained by the Nvidia chips, which are throttling up with the new Vera Rubin coming out. They can be constrained by storage. That's why we have a Micron and Seagate, but there's other storage companies doing well. They're constantly trying to speed them up internally, which are all the optical plays. So one that we don't own right now is Corning, GLW, but it's looking pretty good. Another is obviously Ciena, CIEN, and Ubiquiti. Like I'm in Reno here, and when we upgraded the internet, we had to change all our routers and switches for the internet, because if you run them through the old routers, you only get a gigabyte, and we had to upgrade to 2.5. But the data centers are usually running at 10 gigabyte and have to do everything with fiber. And there's an upgrade cycle, and that's what's going on. Everybody is trying to outdo each other.
So before we get into earnings, we looked up a bunch of other names for this video, and there were a few that almost made the cut. You just mentioned Ciena. Can you talk a little bit more about them?
Yeah, that is a stock that was added to the S&P. It got a boost. When you get out of the S&P, usually your trading volume gets more consistent. So you move less like a bunny. We've talked in the past how when you venture into the mid small cap world, your stocks are going to behave more like bunnies because they sit and they hop. But once you're added to major indices, especially the S&P 500, volatility will drop. Now, we calculate that volatility. There's all kinds of ways to do it, but the big one for us is something called residual variance, which is the risk we can't diversify away. It's basically the random movement of a stock. And so in Ciena's case, that should continue to drop. That will inspire investor confidence. The total standard deviation is mathematically residual variance, which is on systematic risk plus systematic risk. The systematic risk is beta times the benchmark. Anyway, so that's just a formula we calculate. But that goes in the stock's total standard deviation. And so I would expect Ciena's standard deviation would drop. That means it's because it's now in the S&P. That means that its quantitative grade will rise because alpha over standard deviation is my top secret quantitative grade. So it's a big deal, and it's fun to watch these stocks grow up. And, there's a lot of fuss about the Magnificent Seven now because some of them don't look as strong as they used to, but there's definitely going to be new stocks that will take over the Magnificent Seven. I would argue Palantir should be in there right now, PLTR.
All right, to recap, we have 3 completely different ways to play the same chaotic macro environment: ESLT for defense, IAG for gold, and PWR for infrastructure. Dad, what would you say to the person watching this who's just sitting in cash right now, scared to do anything?
Well, I want you to come in when you're ready, okay? And I have no problem if you're scared, but I would highly recommend you come in before the next round of earnings because they should be awesome. That will be third week of April, okay? I do want to remind everybody that the second half of March is seasonally strong, a lot of positive analyst upgrades. We're seeing that, so we're not worried about that. But, just realize the media is always trying to scare you. And the question is, do you want to be a pawn? Do you want to be manipulated? And, we live in a world where you only get headlines or hits on the internet if they're outrageous. So the world will always be bearish. The world will always be ending. Okay. I mean, or you can just enjoy your life. So it's your choice. But if you watch the wrong TV stations, you will be perpetually depressed. And I highly recommend you stop watching those stations.
So you mentioned earnings. Let's talk about a few companies that are reporting next week. Let's start out with Caledonia Mining. Gold is at its all-time highs, and it's a lesser-known miner. What are you expecting for them?
All right. Caledonia Mining, CMCL, is in our managed accounts, recommend our newsletters. This is a more volatile one, but their revenue is steadily rising. Their sales are forecasted to be up 51.3%, and earnings should far outpace that. They don't have the strongest surprise history, so I'm hoping they do surprise us next quarter. The previous quarter, they did miss by a penny, which isn't a lot. Before that, they did surprise. But yeah, this is one of the more volatile gold stocks, but we have this under management. And just so you know, when I buy a stock like this, it's usually like 0.3% of our accounts. So it's not going to be a big weight, but we have, when you add all 20 together, it can be like 15% of the portfolio. But this would be a more explosive one, and hopefully they'll beat, and they should provide good guidance.
Staying in miners, Integra Resources, is this a legitimate opportunity, or is it too small and risky for most people?
Well, believe it or not, this is more volatile than the one we just talked about, CMCL, because it's smaller. I do have this under management too. It's a very small allocation, but they have very steady earnings growth, and the forecast earnings are supposed to be 140%. We'll see what they surprise. When I get into the small miners, sometimes the surprises get more erratic because of their overseas operations and all. But this is another great gold stock out there that you can buy. The other thing I like about this stock is the upside potential is ridiculous when these things get volume in them. This one also does have more of a silver play in addition to gold, so just be aware of that.
On a completely different sector, KB Homes, home builders have had a rough stretch. Is this a buying opportunity, or is there more pain ahead?
There's more pain in the housing industry. KB Homes is, which is, of course, the old Kaufman and Broad. This particular company will discount the homes to sell them, and they're doing better than most home builders. Their sales are supposed to be up 8.5%, but I have no confidence in the earnings at all. Most home builders are discounting homes to sell them, and if they have a big beat and provide good guidance, I take it all back. But it's too early for me to pay attention to this right now.
And lastly, we have Paychex, PAYX. Now, some people think of this as a steady, boring payroll company, but does it still belong in a portfolio in this environment?
Well, their sales are supposed to be up 17.9%. That's good. Their earnings are supposed to be up 12.1%. That's okay. Their analyst estimates are steady, and their surprises have been small in the past. So this is kind of a boring stock, but I'm more curious about their labor market insight, because we're having job issues out there, and I would be curious what they say on that front. But I'm not going to be buying this stock anytime soon.
Well said. All right. If this was helpful, please hit that like button. It genuinely helps us out. And subscribe if you're not already. If you have any questions that you want us to talk about in next week's midweek update, please leave them in the comments below. Of course, we do read all of them, and we love all your comments. But until then, we'll see you this Wednesday for a new video.